If you spend enough time on a dealing floor, I think you develop this highly specific sixth sense for when something is just fundamentally, structurally wrong.
Oh, absolutely. You can almost feel the air leave the room.
Right, yeah. And I want you to put yourself in this specific scenario for a moment. Just imagine you're sitting on a Treasury desk. The market is, it's moving quite aggressively on some unexpected central bank commentary.
Which happens all the time.
Exactly. And you need a mark-to-market on a particularly complex FX option book, but your current risk system is just chugging, it's lagging.
Yeah.
So, in the spirit of modern, agile efficiency, someone on the desk just asks an AI for the figure.
Right.
And what comes back, it looks, frankly, beautiful.
Yeah, it will look like the culmination of a junior analyst's entire week of work. Just perfectly formatted tables, the prose surrounding the figures projects this unshakable algorithmic confidence.
Yeah, you look at the screen and all the Greeks are present. You've got delta, gamma, vega, theta, and they're all just neatly aligned in columns.
Very reassuring to look at.
Spot on. And the text provides a totally plausible rationale for the valuation. But then a senior trader actually checks the premium against a real deterministic pricer, and it's completely wrong.
Completely fabricated.
Right. And we aren't talking about, a minor rounding error here or a slight discrepancy in a decimal place. It is a wholesale fabrication. It's a hallucination wrapped in a bespoke suit.
Which, that hits the desk like a physical blow. Because on a dealing floor, a fluent wrong answer is vastly more dangerous than a machine simply crashing or, returning a standard error code.
Because silence is safe, right?
Exactly that. Silence is safe. You have to go and find the answer yourself.
Yeah.
But fluent fabrication, well, that is catastrophic.
So let's dig into the mechanics of why that actually happens, because I think a lot of people outside of quantitative finance, they just assume that an AI, especially one trained on, billions of parameters, can just do maths.
Yeah, that's the prevailing myth.
Right. So why is a state-of-the-art language model failing to calculate a relatively simple option, Greek?
Well, because it isn't doing maths at all. We really have to strip away the anthropomorphism we've constantly applied to these systems.
Right.
A large language model is, fundamentally, a probabilistic text engine. So when you ask it for the gamma of a 3-month euro-dollar call option, it does not take those parameters and pass them into a Black-Scholes pricing engine.
It's not running a calculation.
Not at all. It doesn't do derivative calculus to find the rate of change of delta. It simply it looks at its training data and predicts the most statistically likely sequence of text characters to follow your prompt.
So it's essentially playing the world's most sophisticated game of autocomplete.
Spot on.
Yeah.
It knows that when people talk about gamma and options together, they usually write numbers that look a certain way.
Yeah.
So it just generates text that resembles those numbers.
Wow. Which is, that is the structural nightmare we're dealing with here.
It really is.
Yeah.
And it perfectly isolates the actual problem with AI in high-stakes financial environments. You see, the issue on a Treasury desk isn't a lack of access to information.
No, you're drowning in it.
Exactly.
Mm-hmm.
We have Bloomberg terminals, Reuters screens, massive internal pricing libraries. Access isn't the problem. The fundamental problem we are facing with AI is authority.
Authority, meaning who or what is actually allowed to claim a capital figure.
Right.
Because if a neural network can just invent a P&L that never existed in reality and then present it with total conviction, well, that's not a helpful technological leap. On a Treasury desk, that is a firing offense.
It is a total breakdown of coordination. When authority is unclear, or when you outsource that authority to a machine that possesses literally zero accountability, the entire risk apparatus of the firm is compromised.
And this is the exact mission for our deep dive today. We are exploring why Treasury desks fundamentally and rightly distrust standard AI chatbots.
Yeah, we're going to look at how to fix it.
Yes, importantly, we are unpacking an entirely new architectural approach that attempts to solve this. We're looking at a system that treats AI not as a clever writing trick, but as a rigid coordination system.
Which is a very different paradigm.
Completely. And we are examining this through a highly specific tool called OrbaLM, which is published by Rondinini Publishing Ltd.
And I think we need to set the boundaries for this discussion straight away. We are stripping away all the usual AI hype today.
Please do.
There will be no sensationalism here. No claims of some magical oracle that's going to predict market movements. We are analyzing a strict, desk-credible solution to this exact problem of authority and calculation.
Which means we really need to address the elephant in the room. Because look, every single vendor currently knocking on a bank's door is claiming they have a, quote, smarter GPT.
Oh, constantly. Every day.
Right. They all have a shiny new wrapper, they've got a new retrieval pipeline, and they all swear blind that they've solved the hallucination problem. So why should a desk head look at OrbaLM and think it's any different from the vaporware they were pitched last Tuesday?
Well, the distinction is entirely structural. OrbaLM is not a foundation model.
Okay.
The foundational models, the massive neural networks trained by the tech giant, they are rapidly becoming commodities. They are incredibly fluent, they possess vast corpuses of text, but they are generalists. They are built to please the user. OrbaLM, conversely, is strictly a control plane.
Let me just stop you there for a second, because control plane can sound a bit like marketing speak.
Fair enough, yeah.
What does that actually mean in terms of architecture? If it's not the model itself, what is it actively doing to the model?
Think of it as a heavily guarded switchboard operator. It takes a customer-approved language model, and let's be very clear here, it does not want your live trade books sitting on a public SaaS cloud somewhere.
Right. That's a massive red flag for any desk.
Exactly. So this could be a model running locally on a laptop, maybe an air-gapped Ollama pilot, or a container within your own virtual private cloud, your VPC.
Okay, so it's a model you already trust and control.
Yes. And it takes that approved model and encases it in strict domain rules and governed tools. And the very first domain pack built for this is specifically tailored for Treasury and FX.
Okay, let's run with that switchboard metaphor for a minute. So the operator, which is the language model, is highly fluent. They can chat with you. They understand your colloquial English. They parse what you are asking for.
Right.
But the operator doesn't actually synthesize the audio or own the phone lines. If you ask to route a multi-million-pound transaction, the operator has to physically plug you into the vault. They can't just mimic the sound of the vault opening.
That is a much, much better way to conceptualize the architecture, actually.
Thanks.
The language model is essentially the eager, highly fluent junior on the desk. They know the terminology. They can write a beautiful summary email.
Very keen to impress.
Extremely keen. But you would never, under any circumstances, allow that junior to sign off on official capital or guess a live exposure.
So OrbaLM is the strict desk policy. It is the unbending set of rules, and it is the physical calculator that the eager junior is simply not allowed to bypass.
Exactly that.
But mechanistically, how does it enforce that? How does a software wrapper actually freeze a neural network from just, generating an answer anyway?
Well, it comes down to a strict order of operations, yeah.
Yeah.
So specifically, it utilizes something akin to semantic routing.
Okay.
When you submit a prompt to OrbaLM, the policy runs first. So before the underlying language model is even permitted to generate a single word of prose, the OrbaLM runtime intervenes. It intercepts the user's intent.
So it's analyzing what I'm asking for before the language model even attempts to answer it.
Correct. It checks what the model is actually allowed to say based on the active domain pack.
Right.
So if it detects that your intent is to ask for a mark-to-market or official capital or a live P&L, it flatly refuses to pass that request to the generative side of the language model.
It just cuts it off.
Completely. It strips the parameters from your prompt, routes them to a deterministic pricing tool, which would be a traditional Python or C++ calculator. It gets the hard integer, and only then does it allow the language model to format the prose around that unalterable number.
So it stops the eager junior from speaking out of turn, basically. And if the tool can't calculate it, does the system just throw an error?
It executes a hard refusal, yes. The refusal is hard-coded into the policy layer. It absolutely will not allow the model to use its generative fluency to fabricate a number just to fill the void.
But looking at the source material, this architecture isn't just, a defensive IT decision. It seems to stem from a very specific, deeply considered philosophy about how complex financial businesses actually operate.
Yes.
And more importantly, how they fail. The literature refers to this as the coordination capital doctrine.
The coordination capital doctrine is really the philosophical bedrock of this entire product family. And its core thesis challenges a lot of the prevailing assumptions on Wall Street and in the city. The doctrine states that intelligence is not a firm's scarce resource.
Which sounds completely counterintuitive because financial firms spend billions recruiting the highest IQs they can find.
They do, yeah. And as a result, most trading floors are practically overflowing with intelligence. I mean, you have PhDs in physics pricing derivatives. You have seasoned traders reading macro trends, brilliant quants writing algorithms.
Right.
The raw intellectual horsepower is not the bottleneck.
Yeah.
The scarce resource is coordination.
Ah, I see where this is going. Organizations don't usually fail because a specific decision lacked intelligent analysis. They fail because the intelligence was decoupled from reality.
Precisely. They fail because the approval of a decision, the state of the data used to make that decision, the constraints surrounding it, and the final execution, they drift apart over time.
Right. Let's ground that a bit. What does that drift actually look like on a typical desk?
So imagine a senior trader approves a massive hedge, and they base this on a spot rate and a volatility surface they looked at exactly 10:01 a.m. But the execution desk doesn't process the tickets until 10:04 a.m. Well, in those 3 minutes, the state of the market has changed. The constraints, perhaps a counterparty credit limit might have shifted.
Right.
The decision was highly intelligent at 10:01, but because the state and the execution were not tightly coordinated, it becomes a disastrous trade at 10:04.
So keeping authority, state, constraints, dependencies, and time all locked together, that alignment is what they're defining as coordination capital.
Yes, and when we apply that exact lens to artificial intelligence, it completely reframes the problem.
Which forces me to ask a rather uncomfortable question, I suppose. We spend all our time in the tech space agonizing over hallucination, the machine dreaming up a fake number.
Yeah, that's all anyone talks about.
Right. But if we view this through the coordination capital doctrine, is hallucination actually the core risk? Or is the real terminal risk overtrust without accountability?
Well, hallucinations are merely a symptom. The terminal disease is overtrust. If a highly fluent AI generates a fabricated number and it looks amateurish and garbled, the desk will just ignore it.
Yeah, they'll laugh it off.
Exactly. The danger arises when the AI generates a beautifully formatted, completely fabricated number, and the human operator trusts it because it looks authoritative.
Which goes back to the cold open we discussed.
Right. You have essentially outsourced the authority of your firm's capital to a machine that possesses zero accountability for the outcome. That is a catastrophic coordination failure.
So how does OrbaLM operationalize this doctrine? Because it's one thing to write a brilliant white paper about coordination, right? It's another entirely to build software that enforces it on a chaotic dealing floor.
It enforces it by mapping its software architecture directly to those vectors of coordination we just mentioned. Let's look at authority, for instance.
Okay.
We keep asking, who is allowed to claim a number? OrbaLM solves this with a golden rule. It's a mantra that dictates its entire runtime behavior.
And what is that?
The rule is this. The model explains, the governed tools calculate.
The model explains, the governed tools calculate. That feels like the anchor for everything we are discussing today.
That is, yeah.
Break down how it physicalizes that separation.
Well, the AI is restricted to doing what it is actually good at. And language models are phenomenal at parsing unstructured text. They're great at explaining market conventions, summarizing meeting notes, or, understanding the intent behind a messy, colloquially phrased question from a busy trader.
Right. They excel at language.
Exactly. But the moment arithmetic is required, the moment a valuation, a risk metric, or a capital figure is needed, the language model is sidelined.
It's essentially put on mute.
Yes. The generative capacity is paused, and the governed deterministic tools take over. The system pulls required data, feeds it into a certified pricing engine, generates the output, and only then allows the model to present that specific hard output to the user.
So if a regulator or a desk head points at a figure generated by this system and asks, where exactly did this come from? You aren't forced to just shrug and point at a black box neural network that nobody understands.
Exactly. You don't have to rely on faith. And this ties directly into the next vector of coordination, which is state and provenance.
Okay.
With OrbaLM, every single answer carries its provenance explicitly.
What does that look like in practice?
When the system returns a valuation, it travels with a specific version of the domain pack that was active, the exact outcomes of the deterministic tools that were run, and the evidence pointer showing exactly where the data was pulled from.
It aggressively separates the deterministic arithmetic from the AI commentary.
Completely. And the final vector is constraints. Now, most modern software is built to be a people pleaser.
Yeah, it always wants to give you an answer.
Right. It wants to give the user something, even if it's just not best guess. But OrbaLM is built to fail closed.
Meaning if it hits a wall, it just stops.
It executes a clear, flat refusal.
Huh.
If a required input is missing, if a connector to your internal pricing engine goes down, or if the user simply lacks the entitlement privileges to view that specific slice of data, OrbaLM refuses to proceed.
A machine designed to stubbornly refuse to guess. That's quite a shift. But let's look at the company building this, because demanding that level of strict, transparent accountability from an AI is bold.
It is.
How do they demonstrate that same accountability to the desks they are selling to? Because I look at a lot of software roadmaps, and they usually fall into two distinct, equally useless categories.
Oh, I know exactly what you're going to say.
They are either vague, glossy marketing promises full of buzzwords, or they are just a chaotic, exposed mess of internal JIRA tickets that make absolutely no sense to anyone outside the development team.
Yeah, the industry standard for transparency is remarkably poor. It usually oscillates between complete obfuscation and just massive oversharing. But OrbaLM approaches transparency as a product behavior.
Okay.
It's a posture they maintain, not just a marketing pitch they roll out for a demo.
They demonstrate this through what they call the What's New board on their marketing site. And I've looked at this. It looks like a standard Kanban board at first glance.
It does, yeah.
Yeah.
It is a read-only delivery board, and it's a literal, real-time manifestation of their progress. It follows a highly recognizable delivery path. To do, in progress, testing, ready for release, and finally, done.
Right.
The cards on this board show the title of the feature or the bug fix, the status, the owner responsible for it, and the ultimate result.
But the crucial detail, and this is where they avoid that messy JIRA track, is that these cards do not click through.
That is a vital distinction. There are no exposed ticket numbers. There are no tracker links.
Right.
You cannot click a card and be taken to an internal browse URL where you can read the developer's private comments or see their internal bug codes or look at unpolished code snippets.
I can hear the pushback from the open source crowd right now, though. They'll say, well, if I can't see the code and the developer chats, it's not real transparency. Why is this lockdown approach deliberate?
Because exposure is not the same thing as transparency.
That's a good point.
The philosophy here is transparency with boundaries. You provide the client with absolute clarity on the status of the work, what is being built, who is accountable for it, and whether it succeeded or failed. But you do not publish the factory's private machinery.
Right. You wouldn't let a stranger walk onto your trading floor and start reading the private Slack logs between your quants just to prove you're transparent.
Exactly. It's the exact same posture they are asking desks to adopt with their AI. You keep your internal data and your live books private, but you demand transparent, proven outcomes from the tools you use.
Now, the phrase that jumped out at me from the source documents regarding this board was, we don't only preach. They are dog-fooding this entire process, aren't they? They are using their own tools to build the tools.
Yeah, the internal mechanics are fascinating because they validate the architecture we just discussed.
Yeah.
The delivery work on that public board is actually tracked using the broader OrbaOS application.
Oh, really?
Yes. Specifically, they use a system called Scenario Forge, which listeners can look at via scenarioforge.orbaos.com, and they use that for the ingest of requirements and the write back into their tracking systems.
So a developer isn't just logging into WordPress and manually moving a card to look busy.
No, not at all.
They are using highly governed coordination tools to manage the development of the AI control plane itself.
Yes. And when a piece of work is completed, they use another governed tool called Berta Seal.
Okay, what does that do?
Berta Seal opens the work ticket, attaches cryptographic proof of the outcome, and formally closes it.
Wow.
And OrbaLM, the control plane, actually calls on these exact same governed engines. It doesn't pretend that one monolithic chatbot is doing everything from writing code to updating a website. It acts as a dispatcher, routing specific tasks to the appropriate deterministic OrbaOS tool.
Right. All of the structural theory, the philosophy of coordination, the transparency boards, it's very rigorous.
It has to be.
But let's get ruthlessly pragmatic for a minute. A machine that refuses to guess sounds fantastic in a white paper. But let's bring it back to the desk reality.
Let's do it.
If I'm sitting there, coffee in hand, staring down a monstrous multi-tab workbook at 8:00 a.m., how does this actually help me? Because despite what a multi-million-pound risk system brochure tells you, we all know what the desk actually runs on.
The desk runs on Excel.
It runs on Excel. It always has. And until the heat death of the universe, it probably always will.
It is the inescapable reality of financial infrastructure, which is exactly why OrbaLM's Excel task pane integration is not just a peripheral feature. It is the killer demo.
Right.
It is where this philosophy actually meets the reality of the workflow.
So walk us through the mechanics of that integration. How does a disk actually use this without ripping out their existing spreadsheets?
Well, you have your legacy multi-tab Treasury workbook open. You've got complex option structures on tab 1, bonds on tab 2, FX forwards, rate-style books, all sitting in these incredibly dense, idiosyncratic sheets that have probably been patched together over 5 years by different people.
Oh, absolutely. A complete mess of macros.
Right. So OrbaLM sits directly inside that workbook as a native task pane.
So I'm not copying and pasting sensitive desk data into an external web portal or a chat window.
Never. You point OrbaLM at a specific selection of cells, a single sheet, or even the full multi-tab workbook, and you ask your question within the pane.
And this is where we need to see the mechanism in action. If I ask it to evaluate the risk on that massive workbook, what does the output actually look like? Because we have to remember the core rule here. The model explains, govern tools, calculate.
Right. So when you ask it to evaluate the book, what good looks like might seem surprisingly mundane, but it is structurally profound. It returns highly structured sections. You will see tables of premiums, DV01, the dollar value of a 1 basis point move swap points, net present value.
But again, if it's not the LLM generating those numbers, how are they presented?
It provides bounded scenario envelopes. You'll receive a low, base, and high figure for these valuations.
Okay.
And crucially, these envelopes are not generated by the AI hallucinating a standard deviation or guessing a confidence interval based on historical text.
Right. It's not just making up a spread.
No. They are generated under clearly documented mathematical shocks executed by the deterministic tools behind the wrapper. The system explicitly refuses to claim a statistical confidence interval because it knows it is merely running discrete deterministic scenarios.
Let's contrast the exact output with the bad AI that desks have been subjected to for the past 3 years.
Oh, the difference is night and day.
Because I know people listening have tried to paste a spreadsheet into a consumer AI, and the results are maddening. You ask a standard chatbot to analyze a complex risk sheet, and what do you get? You get a beautifully written 3-page methodology essay about how one might theoretically calculate the value of an option.
Yeah, completely useless in practice.
Exactly. You get 0 executable numbers.
Or worse still, the context window just gets overwhelmed.
Right.
The standard AI analyzes the very first sheet, completely ignores the other 49 tabs in the workbook because it ran out of memory, and presents its findings on that single tab with absolute definitive certainty. It lets its fluency masquerade as holistic authority.
It's the eager junior reading the first chapter of a 500-page report, walking into the morning meeting, and confidently summarizing the entire book.
Spot on. That's exactly what it is.
And OrbaLM structurally prevents that. If it evaluates the book using governed tools, it labels the arithmetic. You know exactly what is a calculated DV01 and what is just the AI summarizing the column headers.
And if it encounters something it cannot price, say a highly exotic barrier option buried on tab 12, and it doesn't have the specific connector to price that exotic, it refuses.
It just tells you no.
Yes. It highlights the gap to the user. It fails safely and loudly rather than guessing quietly.
Okay, this brings us to the commercial reality, because finding an architecture designed to refuse to guess is rare.
Very rare.
So if a desk head is listening to this and realizes they want this governed behavior, they are tired of fluent hallucinations, and they want a rigid control plane, what are the actual mechanics of the rollout? Because enterprise software deployment is usually a total nightmare of procurement.
The timeline and the terms of this rollout are very concrete and, frankly, highly unusual for institutional financial software.
How so?
Well, shipping officially starts in September, and it is being deployed as a founding beta.
Now, I want to spend some time on the commercial stance here, because when I read the source material, I had to read this section twice. The beta is free for 3 months from activation.
Right.
But the kicker is what happens after. After those 3 months, the desk runtime remains with you for free.
Yes, it does.
I'm going to repeat that because it sounds like a trap to anyone who has ever bought software. After 3 months, the runtime remains free. How does that actually work mechanically?
Let's remove any ambiguity here. During the 3-month founding window, you have full access to the platform.
Right.
When that window closes, the updates to the domain packs and access to the enterprise track features will cease. However, the runtime itself has been up. The control plane sitting in your Excel task pane, answering your questions and utilizing the specific deterministic tools it has already been granted access to that keeps answering.
It doesn't just lock you out.
No, it does not hit you with a paywall, it does not lock you out of your workbook, and it does not demand a credit card to keep functioning.
That is a staggering way to build trust. I mean, the standard sauce playbook is to hook a desk with a free trial, integrate deeply into their workflow, and then essentially hold their productivity hostage until procurement signs a massive licensing deal.
Exactly. They are betting entirely on the value of the governed architecture proving itself. But because they're offering this, the access rules to get into the founding beta are incredibly strict.
I would imagine so.
This is not a consumer sign-up. You cannot navigate to a website, click Add to Cart, and download a trial. There is no online checkout page whatsoever.
So how does a desk actually acquire a seat then?
It is strictly by inquiry only, via a specific email address, orbaLM@orbeos.com. And there are hard, unbending constraints on that inquiry. First, a legitimate company email is mandatory.
Okay, so no personal accounts.
None. If you email them from a Gmail, a Yahoo, or a personal Outlook address, the request is instantly discarded.
Desk credible from the very first interaction. They only want to speak to actual practitioners.
Yes. Second, access is strictly limited to one seat per company location.
Wait, elaborate on that. What constitutes a location?
If your firm has a trading desk in New York and another desk in London, those count as two distinct physical locations.
Okay.
You can request one seat for the New York desk and one seat for the London desk. But you cannot request 50 seats for your London office during this founding beta. They're forcing a controlled, validated rollout.
Which tells you exactly who this is built for. It's for serious practitioners who want to validate this coordination capital architecture in their own environment on their own dense workbooks without committing to a massive enterprise rollout on day one.
Exactly that.
But touching on that environment, what about privacy? If I'm installing a new AI tool on my desk, my immediate concern is data leakage. Is this thing going to send my proprietary option structures back to some tech giant's training server?
That gating process we just discussed actually acts as a feature when it comes to privacy. On their marketing site, the GDPR and cookie user experience utilizes a framework called plain consent, which is very straightforward and avoids deceptive design patterns.
Good.
But more importantly, the system itself is built for private, desk, or VPC postures. It is explicitly designed to sit inside your boundary, communicating only with the approved language model you have selected.
And what happens when a user inevitably tries to get clever? Because we've all seen the classic jailbreak attempts. Someone on the desk will definitely try to write a prompt that tricks the AI into bypassing the policy layer to say something it shouldn't.
Oh, guaranteed. But the architecture is designed so that jailbreaks or attempts at prompt extraction fail closed.
How does it handle it?
If the runtime detects an attempt to bypass the policy layer or subvert the domain rules, it doesn't try to engage with the user. It doesn't try to outsmart the prompt or offer a witty refusal. It simply shuts down the request.
Just a hard stop.
Yes. Normal practitioner-focused questions work smoothly, but malicious or out-of-bounds requests hit a brick wall and return an error.
It is remarkably refreshing to see a system that doesn't try to be your friend.
It really is.
Well, we have covered a massive amount of ground today, moving from the philosophical nature of coordination down to the very specific, messy realities of Excel task panes. So let's synthesize this deep dive. I want to give the listener 4 concrete beats to walk away with.
Sounds good.
First, OrbaLM is a control plane. It is not a foundation model brag. It is not about having a smarter generative AI. It is about having a governed, strictly controlled wrapper around whatever model your firm actually approves.
Second, the core operational rule of that control plane. The model explains, governed tools calculate. Fluency is never, under any circumstances, permitted to masquerade as arithmetic authority.
Third, they practice transparency with boundaries. They offer a public delivery status board so you can see exactly what is being built and who is building it, but they fiercely protect the private internals of that work. There are no exposed JIRA tickets, no vulnerable development roadmaps.
And fourth, the mechanics of the founding beta. It is free for 3 months, and crucially, the desk runtime remains free afterward. It ships in September, and it requires a strict company email inquiry, strictly limited to 1 seat per location.
For the legal and brand housekeeping to wrap this up, OrbaLM is part of the Orbeos family, published by Ron Danini Publishing Ltd. Their offices are located at 60 Tottenham Court Road, Suite 6438A, Fitzrovia, London. If you are on a desk and want to make that specific inquiry we discussed, you must direct it to OrbaLM at orbeos.com from a corporate address. You can also visit Berta.one for their wider tool fleet and scenarioforge.ormaos.com if you want to inspect the delivery systems they use to build this.
And as we close this deep dive, I just want to leave you with a final thought to mull over, something that connects the architecture we've discussed with the broader trajectory of our industry.
Please do.
For decades, the technology sector has measured a machine's intelligence by how much it can say. You know, how vast its vocabulary is, how quickly it can generate prose, how perfectly it can mimic human conversation.
Right, the Turing test approach.
Exactly.
Right.
But as we've seen today, in high-stakes, capital-intensive environments like a Treasury desk, that kind of unconstrained fluency isn't just unhelpful, it is actively dangerous.
It's a liability.
Yes. So perhaps as we move forward into this next era of deployment, the true measure of artificial intelligence won't be its ability to speak fluently, but its stubborn structural capacity to refuse to guess.
A machine that finally knows exactly when to stay silent. Now that is a profound shift in coordination. Until next time.